The base rate has just increased to 3%. So we're just going to discuss a few things in this very short video. But first of all, I just want to remind everyone to just step back and take a breath. Bad news sells. So it's in the best interest of news articles to put out headlines that are going to be eye-catching. But although the base rate has increased, it doesn't mean necessarily that the fixed rates are going to increase. It's going to have more of an impact on variable rates, particularly tracker rates, because they move up and down in line with the base rate. I've made a separate video on the base rate and how this affects interest rates, so I'll link that in the description below. But the purpose of this video is just to try and put some minds at ease. So especially those of you who've got remortgages due, you're probably going to be pretty concerned about what you're going to do once you need to remortgage onto that new rate, what your new monthly payment's going to be. You know, not everyone's got £250 a month, £400 a month spare to be throwing at their mortgage. So I'm just going to list off a couple of things for this video. So it's going to be a fairly short video compared to the others. And that's going to include some ways that you can actually help reduce your mortgage payments. So first of all, if I was looking at a mortgage now, whether I was buying or remortgaging, I wouldn't just automatically look at jumping onto a fixed rate. So I'd be looking into all options. That includes your variable rates, particularly your tracker rates. Now, it might seem a bit backwards that I'm even saying to consider this, because if we're looking at a tracker rate, that's going to increase when the Bank of England increases the base rate. And where we've had quite a few base rate increases on the bounce now, it doesn't seem right that you would even consider that as an option. But when we're actually looking at the mortgage products, the fixed rates are priced pretty highly. When we're looking into options for clients now, say we're looking at comparing fixed rates and tracker rates, we're looking at, you know, how much more does the base rate need to increase by to actually level what the fixed rates available are offering. But that being said, if you do want to know exactly what your monthly payments are going to be and that they're not going to change, and you're happy that the fixed rates are a little bit more expensive than what you could get on a variable rate at the moment, then by all means go for that option. But what I'm trying to say here is just talk it through with your mortgage broker, just so that you understand your options fully before jumping into a remortgage or an application for your new purchase. The other point is that if you're sitting on the lender's standard variable rate at the moment, then you really should be looking at your remortgage options. Whether that's a fixed rate or a variable rate that you go for, there's a strong likelihood that there's a better option out there for you than just staying on the standard variable rate. So speak it through with your mortgage broker, see what your options are, and potentially save a bit of money straight away there. And now, if you are looking at your new purchase or you're looking at a remortgage that's coming up, then if you're sort of struggling to see how you're going to afford the monthly payments, then there's a couple of options that you can look at to actually bring those monthly payments down. So the first option would be to look at an increased mortgage term. So a mortgage term is the amount of time that the mortgage runs for in full. So it's not just the 2-year or 5-year or whichever the arrangement of the initial product that you choose, it is the amount of time that the total mortgage will run for. So you can look to increase that term, which will then reduce the monthly payments. So it might not be an option that's available to everyone. You might be at the maximum mortgage term that you can get based on your circumstances, but it's something that's worth looking at. But speak it through with your mortgage broker, understand what the risks are. The main one being that you will pay higher interest overall if you've got a longer term. But this doesn't have to be a long-term solution. It could just be for the next couple of years, and then you review things from there, potentially reduce that mortgage term thereafter. Or you can look to make overpayments potentially. Just check any penalties that might apply. Usually you get 10% overpayment facility for a fixed mortgage, and sometimes if you're on a variable rate, there might not be any limit to the amount that you can overpay. Those overpayments can then help reduce that term back down again. And then if you've looked at the option of a longer mortgage term and you're still really struggling to see how you're going to afford these payments, then you can always look at whether or not you'd be eligible to get an interest-only mortgage. Now, it's not something that we would usually recommend, but if you're all out of options, an interest-only mortgage would provide cheaper monthly payments. But again, it's really important that you speak through the pros and cons with that with your mortgage broker. So the main consideration here, if you're looking to arrange an interest-only mortgage, you're not actually paying down any of the debt on a monthly basis, you're only paying interest, and that's what makes the monthly payments lower. So you've got to be thinking about, at the end of that mortgage term, I'm going to have to pay off a lump sum from my mortgage. So how am I going to do that? But again, it might not necessarily be for the full term of your mortgage. You could look at potentially arranging this over the next couple of years, and again, reviewing it and changing it back onto capital repayment thereafter. Both of those options, it's just important that you talk it through with your mortgage broker, but they are ways that you could help reduce those monthly payments in a difficult period like this. So just to summarise, make sure you consider all your options if you're buying or remortgaging. That includes fixed rates and variable rates. If you want to reduce your monthly payments, speak to a mortgage broker and talk through your options. Some examples of how to do that might be to extend the term, potentially interest only as well, but understand the pros and cons of each and the risks associated to them. And lastly, take what you read in the news with a pinch of salt. Bad news sells, so it's really easy to start reading into all of this stuff and get really concerned. If you want to put your mind at ease, speak to your mortgage broker, see what your options are, and you might find that you're actually in a better position than you thought. I hope this has helped. If you've got any questions at all, pop them in the comments below. And if you're not already subscribed to the channel, do consider subscribing, and I'll see you in the next one.